I explain you one of the financial statements, that is balance sheet. You might have remembered we already have discussed what is balance sheet. Balance sheet describes the financial position of the business at the end of accounting period. After completing this balance sheet, I'll explain you how we can find out whether the business has a strong financial position or a weak financial position. After completing this balance sheet, we'll find out whether the business has strong financial position or weak financial position. Similarly, we can also find out the ability of the business to pay its liability or debt. If business has capabilities to meet its financial obligation, that means business or firm is solvent, or vice versa. In other case, if the business is not able to pay its debt, then it would be considered as insolvent. Let's understand the structure and the construction of balance sheet. As we know, in the balance sheet, on the left hand side assets are shown, and on the right side liabilities and capital or debt and equity are shown. So we start to calculate from current assets. We can find out the amount of cash if given in the pre-closing trial balance. Yes, in the pre-closing trial balance, the amount of cash is given. I am just copying. This is the amount of cash is given, 100,000. We just copy here. The second current asset, it is account receivable, and again I am just copying from the trial balance. You can see the amount of receivable is given rupees 70,000. Balance sheet is always, or here in the financial statement, balance sheet, we are constructing balance sheet at the end of accounting period. So I have to write the cost of ending inventory or the value of ending inventory, and not the beginning inventory. At the end, after completing this balance sheet, or at the end of completing all these financial statements, I'll explain you why the opening inventory is an expense account and the closing inventory as a revenue account. So I am writing here the value of closing inventory as given in the adjusting data. You can see I have also yellow highlighted the closing inventory. Why? Remember one thing, if anything is given in additional data or additional information at the end of accounting period, that is December 31st, 2019, you can see the closing inventory is given in the adjusting data or in the additional data or information. Anything which is given at the additional data or at an adjusting data, it always affects two sides of accounting equation, that is left hand side and the right hand side. Maybe on the same side, but if for example it is mentioned on the same side, then we have to add and the subtract from accounting equation from the same side. So here I have made a yellow highlight to show you that if anything is given in the adjusting data, then it will affect two sides. Here we can see it also affects in an income statement, and it is also affecting in a current assets or in balance sheet. So anything given in the adjusting data, you have to be very careful. It will always affect on two sides. Let's take an example of cash. There are no informations available in the adjusting data regarding cash. What does it mean? It means it will affect only one side, that is balance sheet. You may take any other titles or accounts from your pre-closing trial balance, whether it is a cash or account receivable. Similarly, account receivable, it has no information available in the adjusting data. That is why I am just copy paste in the balance sheet to account receivable account. And similarly, look at the office supplies account. Office supplies is current assets. There are no information available in the additional data. You just have to make a copy. When information are not available in the additional data, it means there are no changes in the office supplies. There are no changes in the cash. The amount given in your pre-closing trial balance, you have to write it as it is. Similarly, prepaid insurance, again it is your current asset. There is no change in your prepaid insurance. You just make a copy, and finally you can make a total of all your current assets. Now the next step, you have to calculate. The next step, you have to calculate the fixed assets. As you can see, the amount of office equipment is given in the trial balance. You can just make a copy here. And remember, the value of accumulated depreciation is also given. I repeat, what is depreciation? You might have remembered. Allocated or expected or estimated value of utilizing any tangible fixed assets over its useful life. हम ये कह रहे हैं कि हमने ऑफिस इक्विपमेंट 1,40,000 का खरीदा था, उसमें से 25,000 का अब तक हमारा अंदाजा है यूज कर चुके हैं. तो अब हमें बताना है कि इसकी बाकी बैलेंस वैल्यू क्या बनती है. इन द बैलेंस शीट यू हैव टू राइट ऑल द बैलेंसेस. तो इसमें हमें बैलेंस बताना है कि उस 1,40,000 में से इफ वी आर सब्ट्रैक्टिंग 25,000 accumulated depreciation from the historical cost of office equipment, that is 1,40,000, we get the answer is 1,15,000. So it is also called the book value, or you may say it is the balance, closing balance of office equipment. Similarly, you can see the furniture is also your fixed assets. Here the amount in the trial balance is given, but there are no depreciation given for furniture. What does it mean? We may assume that if there are no values given, it means the furniture has been purchased recently or in a current period, so we have not calculated the depreciation. Now there are two values of fixed assets: the balance value of office equipment plus the balance value of furniture. If we add both of them, then we get the result of total fixed assets. By adding current assets and fixed assets, we get the total result of left hand side of accounting equation, that is asset side, that is 4,58,000. We have just added the current assets and the fixed assets. Now let's move to the right hand side of accounting equation, that is debt and equity. So we start from the current liabilities or the current debt. Again, you can see in your pre-closing trial balance, the value of account payable is given. I am just copying it. It is our current liability. You might have remembered what are liabilities. The financial obligation of the business is called liability, or the outsider's claim in the business is called liability. Any claim other than equity is also called liability. So there are two current liabilities given here in this example. I am just copying them, and now you have to make a total of your current liabilities, which is equal to 35,000. Now let's come to your long-term debt or fixed liability. There is only a single fixed liability or the non-current liability, that is bonds payable. Again, see in your trial balance, I am just copying it. Why I am just copying all these informations available in the trial balance? Because there are no informations given in the additional data or adjusting data. Now let's make the total of current liabilities and the fixed liabilities, so you get the result of total liabilities. It is better to write the total of current liabilities here in this column, and again the total of bonds payable. If we write here, it is better to write here. Okay, we can write the amount of fixed liability, that is only one, bonds payable, and we can calculate the total of current liabilities and the fixed liabilities. So it is our total debt. Total debt is equal to 95,000. Now the next part of the right hand side of accounting equation, that is equity part. Equity is the owner's claim in the business at the end of accounting period. So here the owner's claim, you can see the paid up capital, the investment by the shareholders is given, that is 1,50,000. I'm just copying it from our pre-closing trial balance. Paid up capital is, you may also say, the shares capital or stock. After writing the paid up capital, now we have to write the results of retained earning at end, which we can write from the statement of retained earning. We can see here, you can see here, statement of retained earning, the ending balance. I am just copying from here. So in this way we may add paid up capital and the amount of retained earning at end. In this way we also have calculated the right hand side, the amount of right hand side of accounting equation, that is equity amount. Now let's make the total of right hand side of accounting equation, that is debt plus equity. The total debt is equal to rupees 95,000, and then total equity is equal to 2,63,000. So we can see here the left hand side, the results of both sides. The left hand side of total assets is equal to the right hand side, that is total debt plus equity. So in this way the statement of balance sheet is completed. Now in my next video I am going to explain you the financial position of this X corporation as well as the solvency of the firm. Thank you so much.